Hey guys, can you hear me? Can you hear me all good? YouTube. Sweet as. Alright. Let's get cranking. Hey guys, just wanted to do a bit of a marathon stream today, talking anything crypto. Recently launched a new site, Startcrypto.online. So if you guys want basically free, completely free content, head over to that website. And once you create an account, under trading content, there's a complete beginner's course, mining and Masternode stuff. There is obviously an advanced course for subscriptions, and we're going to be doing live trading as well, but we're not here to talk about that today, guys. So if you want a whole bunch of free content, jump on over to the website and have a look there. Let me know as well. Heaps of people love the site. They love the layout. They love all the videos, all the content that's there. So thought we'd do a bit of a marathon stream today to celebrate this, and then we'll kick off and go over some Bitcoin pricing. Any other coins that people want to chart up or have a discussion about. We'll go over some news articles today. Anything you guys want to talk about. So what we're going to do to get into it, we're just going to go over the recent Bitcoin price action lately. So we were holding, we've been holding, I'll show you guys this on a brand new chart actually, because I'm going to show you guys how to update your charts and so forth as well. US dollar, doesn't really matter which one at the moment. Bitfinex will do. Okay, so starting off, guys, we're going to head out to our weekly chart. We want to use the higher time frames, and always do your technical analysis on top-down time frames. We can even zoom out to a monthly if we really want to get crucial about it. Obviously in a monthly kind of candle, we're in a massive bearish engulfing, which tells us we're going to be bearish for quite a possibly quite a while. We're just hitting the 50 EMA now. I don't use many indicators either, guys. We want to just go over price action as well. From a monthly point of view, we're still looking bearish. From a weekly point of view, we're still looking bearish. From a daily point of view, we're still looking bearish as well, as we've had a lot of acceleration to the downside. Now, there's a few things which could have impacted this price action right here. Obviously, from a technical point of view, I'll put a couple of lines on here to make it a bit easier for you guys to see what we're talking about. From a technical point of view, we're definitely looking more bearish, okay, from a technical point of view. Now, Bitcoin and crypto is slightly different, in which case we do need to take fundamental analysis into view as well, mainly because the price of, say, Bitcoin, which is our main crypto, is used in a proof of work fashion, okay? So we need to take into consideration a bit of fundamental analysis about Bitcoin mining as well, and how much Bitcoin mining costs, because you've got effectively large companies and large pools like your Bitmain guys, your CoinGeek guys, the whole Bitcoin Cash crap that's been going on at the moment, between Roger Ver and Craig Wright with the two different sides. All that comes into play because realistically, Bitcoin is, people mining Bitcoin are realistically mining it to make money. They're not really, unless they've got a huge stake and huge portion in the coins themselves. Like your normal average miner is not going to just continue mining Bitcoin when when they're mining at a massive loss, because if you're mining at a massive loss, effectively you can just, if you've got a fiat income that is still there, you can just turn your miners off. You can buy more coins than what you're spending on electricity. So technically you're better off just buying Bitcoin rather than mining Bitcoin right now, especially if you're in Australia, because our electricity cost is obviously very high. So from a miner's point of view, unless you've got a massive company, massive investment in Bitcoin mining. You might as well just buy Bitcoin at current rates. Obviously, that can change if we hit another bullish market and price goes up and you're mining more Bitcoin than what you could be buying Bitcoin for. But that's another one of my reasoning kind of behind why we've had such a large change at the moment. Why we've had such a large change at the moment with Bitcoin price is because as of, say, 14th, 15th November, when Bitcoin Cash forked, what we've got is instead of all your Bitcoin mining companies only being able to mine Bitcoin and Bitcoin Cash, the whole network hash rate has now been split between 3 coins rather than 2. So realistically, your Bitcoin mining price to break even becomes a lot lower. I'll show you guys here. If we just go Bitcoin mining calculator. Okay, so this is kind of like my fundamental reasons why we've kind of dipped a bit lower. Now, obviously your S9 miner, which is the most common miner, they range between 13 to 14 terahash of hashing power. They use about 1400 watts, and cost per kilowatt, this obviously depends on where you're located. The large mining guys have obviously got their own pool, so they're going to pay 0% fee. So cost per kilowatt in Australia is about 16 cents US dollars. So this is, as an Australian right now, if you're mining Bitcoin, you're definitely mining at a loss. Okay, profit per day, you're losing $3 per day. Guys like Bitmain and so forth, they're mining in China. Now, China price per kilowatt ranges from about 4 cents US dollars to about 6 cents US dollars, and then US as well starts at about 6 to 8 cents. Okay, so as you can see, unless they're mining at like 8 cents per kilowatt, they're not really losing much per day at the moment. And that's with Bitcoin price at current price at 4,000, right? Previously to our dip, this 6K level, this 6 to 6.2K level, which was holding so strongly for these 4-5 odd months, that was the previous break-even cost for these units at around 6 cents per kilowatt. Okay, it was about 6K Bitcoin, and your profit per day was pretty much nothing back then. Now, since we've got the network hash rate being able to be split across 3 coins instead of 2, that brings our price per Bitcoin while mining right down to 3.5 to 4K level, which means that miners that are mining Bitcoin can easily sell off anywhere between now right down to 3.5, 3K-ish and still be profiting in this market. So that's a little bit of fundamentals behind kind of why we've had a dip. Technicals have always still been pointing to the downside. We've got this we had this massive support level here, but we're still failing to make higher highs. So that throughout this whole period, we're still making lower highs. Okay, I'll just circle them for you so you can see what I'm talking about. And this whole period, we're still making lower highs through this whole time. We've obviously got a massive wick here, but we didn't close above. Okay, this was very important. We didn't close above any of these previous levels. We spiked above it, but we didn't close above it. So we're still getting all these lower highs throughout this whole period, while bouncing off, this same zone around here. So that's basically a bearish indicator that we're going to break to the downside, approaching that sort of triangle and that sort of level. So that's from a technical point of view. So that's kind of my thoughts on the current big dip. Plasma.io just posted about. That's kind of where we're at with Bitcoin at the moment. Now, if we go back to previous levels of support, our next level of support, we're around our next level of support here. Currently around this 4 to 4.2K level, which we're at the moment. So if we go back, just delete that. If we go back here, back to previous price action, around about that 4 to 4.2K level, which is around this level here. this is the level we bounced off before we started that massive acceleration to our 20K high. Okay, so around that 4.2K level. And we obviously retested a 3K level, which was our previous new high back in mid-2017. Okay, so our next levels of support for our downside are around that 4 to 4.2K level and our 3K level. Okay, so 3K is going to be 3K is going to be our next big zone that we need to look at. And it's not that far away. Okay, so it's not that far away for price to get to. 3K, and that's going to be this is basically our new support level. 4 to 4.2K is obviously not a very strong support level. 3K is definitely a stronger support level. These levels are where we're going to get our potential bounce. If we break below 3K, we're heading right down back to our previous highs of around $1,300. Now, if we get down that low, I'm going to be selling off a whole bunch of crap basically to buy a crap load more Bitcoin. If we get anywhere near the 3K level as well, which we definitely possibly have, you know, I may be thinking of doing this similar thing. I don't have a normal fiat income. Obviously, I trade, get all my money from Bitcoin and cryptos. So from a trader's point of view, you know, you can trade this downside. I'm currently sitting out of the market on the sidelines at the moment. I'm not shorting this at the moment because this to me is extremely low price. These are new lows for us. Okay, so these are new lows for us since, you know, over 12 months ago. These are new lows for us from back in October last year. So these are 13-month lows, and I'm not shorting this market at the moment strictly because they're new lows. Okay, I'm not trying to find the bottom myself. I'm not trying to trade to the bottom. I'm waiting to see what price is telling me, and then I'm going to jump in the middle. So all these middle zones are good to trade, but you're not going to pick the top. You're not going to pick the bottom every time, guys. There's no point trying to catch a falling knife, as well as they say. We're not trying to go long from here. You know, short-term price action, if we scroll down to like a 4-hour or an hourly chart, it looks like we're getting a reversal, but that's where a lot of people get suckered in as well. Okay, so if we go right down to an hourly chart, from an hourly chart, you know, we've bounced off 3,600 and we've gone back up to 4,200. So that's, you know, that's obviously like a 20% gain within the last, you know, 24-hour period, 12-hour period or so. That's obviously a 20% gain. Now that sounds massive. It's like, cool, crypto's gone up 20%, you know, Bitcoin's gone up 20% in the last, you know, 12-hour period. But as you see with market structure, we're still making lower highs throughout this whole period. So these are our lower highs, which means we're still bearish. Okay. If this here, okay, if this here closes here and we get another move to the downside, that's our next lower high. Okay, so we're not gonna change trends until we start to get higher highs and higher lows. Okay, kind of like if I draw it in kind of an arrow, you know, if we come up here and then my arrow go, you know, if we kind of do this kind of thing, this is when you start to get trend changes. But for a trend change for us to show a bullish trend change, don't get suckered into these lower time frame charts yet, guys, because if you scroll out to even like a 4-hourly time frame, you can see how the picture looks completely different. Okay, we're still making, you know, we're still not making higher highs and higher lows to justify a trend change to go long or anything at this point. For me to be going long at this point in time, you know, we've really realistically got to break back above this 6K level, higher highs, higher lows, and then I'll look to possibly trade long from there. For me to start trading short term again, for me to start taking short positions again, I would look for a retest of around this level. Okay, so if price comes back up to around this level, maybe this trend line, something like that, and we start to see a short position setting up, I could trade it short back down to around these levels, okay? Because these are the levels that price is going to bounce between. So it's important to learn your It's important to learn your support and resistance levels, along with where price is going to bounce and possibly get to be setting up to take profits. Okay, in this market, guys, you really want to be taking profits. We're not going, you know, I see a lot of people harping on about they've been short the market, short this, short that since, you know, January, February, March, that kind of thing, June, July, which is all fine, but you still need to be taking profits because we don't know how low the market's going to go. You know, no one knows. No one really knows where price is going to actually get to. You know what I mean? Like, no one knows we're going to hit 3K. No one knows we're going to hit 20K. No one knows we're going to hit $1,300 and that sort of thing. So we need to let the market decide and show us and trade in between those levels, taking profits and opening positions between those levels. Okay, we're not trying to catch the bottom. We're not trying to catch the top. We're taking profits between levels to accumulate either more crypto or more fiat or whatever you need to do for your strategy. Okay, so it's important to include that in your strategy. Make sure you got that in your strategy. Prabjot, I hope I'm not butchering the name. Fingers up, nice. Niraj, hey buddy, nice to see you here. If anyone's got any questions, guys, you know, type in the chat there. Happy to go over whatever we're talking about. So that's kind of what I'm doing at the moment with Bitcoin, what's happening in the market for me, what I'm kind of waiting for, and we'll see, you know, we'll see what goes from there. Has anybody else got any, you know, crypto positions open at the moment that they want to kind of talk about, or no one's going to really talk about something, I'll just chat up. Oh yeah, I'm trading Bitcoin SV with BTC. Yep. Let's have a look at that. Let's have a look at Bitcoin SV. Okay, did it get like delisted or something? BTC. BCHSV. Now, I did take a trade on. We'll cover Niraj's question. We'll go over Bitcoin SV and then we'll get to Mac 3D. And yeah, Tech Insights. I can definitely do Tech Insights, Mac 3D. So stick around, mate. We'll just cover this Bitcoin SV stuff. So yeah, Bitcoin Cash SV. Now I posted about this. I posted about this in my group before the fork and everything happened. Just let me show you guys where we're at. So yeah, I did post it was a public video as well. So I did a public video on you know, four trading potential opportunities in Bitcoin Cash fork. So I actually only took one of these opportunities, which was I bought Bitcoin Cash SV. Okay, I bought Bitcoin Cash SV. It was about 0.0184 or 0.0185, and I sold at 0.02888. So if we look back, I don't know if, I think Poloniex is on, yeah, Poloniex is on TradingView. Let's have a look on TradingView rather than Poloniex itself. So this was a good trade opportunity that I took. I bought before the fork happened. This move here, I actually bought Bitcoin Cash SV at around 185, or was it 0.0175, 185 or something, and I sold it at 0.0288. So this first move here hit my first order, and that was a 55% gain on that move. So that was good enough for me. I did have a second sell order set at 0.0388, okay, which didn't actually trigger. It got very, very close. It went to 0.03 3855 it went to. Mine was at 3888. So missed out by a very small amount, but I ended up selling off that position above my first position just to get out of the trade, because that was my whole reasoning for purchasing. It was to catch the first pump. Now, things like this where prices come very, very low, I was thinking about taking some sort of opportunity around here, because this price was coming back down to a previous low. Now, obviously, Bitcoin Cash SV is like, it's a very, very new coin that's just come out since November 15th. So the technical analysis data we've got is very, very small. The data's it's not really data to go off per se. We don't know what the highs and the lows are realistically going to be, because, we haven't really seen enough price action to determine a long enough trading stance. But, anyone that kind of took price around, took opportunities around here, there was nothing kind of wrong with that. The only thing wrong with this part was there was a lot of drama, and this is obviously why price moved down to here. There's a lot of drama around the potential of Bitcoin Cash SV potentially getting delisted from a bunch of markets based on what they were doing with their actual coin themselves. They ended up doing something, I can't remember what it specifically was, but it's a potential thing where exchanges obviously don't like that, because there's a potential loss of money there. And they were like, well, some exchanges are going to start delisting this, so I think everyone just dumped and offloaded most of what they have. Now, obviously, we've passed that at the moment, and we've had a great move. So anyone that kind of took a risk down here and bought down here, they've obviously kind of doubled their money from that point of view, more than doubled their money. 2.5 times their money potentially if they took profits up here. Again, I'm not really trading this market at the moment. There's not enough data there for me to be trading. But yeah, be careful with that. Be careful with that though. So how's your positions and everything going anyway, Niraj, on that front with Bitcoin SV? Have you scaled out any? Have you taken any profits yet? Where are you kind of sitting with that? So we'll just jump over to Tech Mac 3D, Tech Insights. Making profits every day. Nice work. Good job. There's nothing wrong with if you're buying and selling along the way. Just be careful, obviously, when you start getting back to previous levels. Around here, definitely wouldn't be buying anywhere above there. We're kind of at a bit of a cross point here as well. So that would, right now would be a good profit level for me. If I got in obviously lower. If you're getting in on the pullbacks and push up, take profit, that's great, man. Good to see profiting from Bitcoin Cash SV. So for you, curious about what you think about the platforms competing with ETH. It's like anything, man. Ethereum at the moment is kind of like Bitcoin in the way of, Ethereum's the first developer platform where people can actually develop dApps, as they call them, decentralized applications. So it's already got majority of the market share. Now, when you've already got majority of the market share, it's very hard for something else to come up and take that from you. Obviously, in the long term, anything is possible, but right now, especially from a coin point of view, like price wise, don't really see much competing there at the moment, based on the fact that last time I checked, Ethereum had over like 1,500. Don't quote me on this, but it was either 1,500 decentralized apps or it was either 1,500 actual developers working on the project. I can't remember which it was. I think it was the dApps. So, you know, when you've got that many decentralized applications that are already out there, and it's open source, so anyone can use them. When you've already got development done, it makes a lot of people pick it. And another reason why Ethereum's so important at the moment, or is staying right up here, is because a lot of, you know, you look at pretty much every ICO that's happened over the last 12 months, it's all been Ethereum-based tokens, because it's so easy to create an Ethereum-based token. You literally create a token. I mean, obviously, it's not going to have the potential smart contract or potential security measures in place and whatever, but you can literally create a token within like 5-10 minutes. So a lot of these ICO platforms that have come out in the last 12 months can do that. When you were talking about tech insight, I thought you were approaching from the mining side. So I do have some stuff for the mining side, tech insights as well. But strong. I guess I'm watching the platforms who will chase them. Neo, EOS, yeah. So platforms like Neo and EOS are great. And I agree with you there. Ethereum is definitely the most single and the most useful and implemented crypto to date, based on the fact that it's a cryptocurrency, but you can also implement the smart contracts with it. Okay, so obviously Bitcoin, you can't do smart contracts with Bitcoin. Ethereum, the smart contract element is what differs it from Bitcoin, obviously. So it definitely has a lot of potential. Now, if they can solve, this is the other thing, if Ethereum can solve the scaling issues, which we saw happen with the likes of things like CryptoKitties, where everything just went completely nuts, and the whole, you know, most of the network kind of turned into the Bitcoin network when we went crazy as well. If they can solve the scaling issues to handle the massive transactions that were potentially needed on that front, we're going to see them continue to be there, and that's why I'm sort of more hesitant to say something's going to overtake it anytime soon, based on the fact that you've got so many developers already using Ethereum and already working on Ethereum, whereas things like Neo and EOS and stuff, they're obviously new cryptos that have been launched fairly recently in the long-term scale of things, and their teams are much smaller than what Ethereum-based developers have. So from a technology point of view, and from just a man hours point of view developing on the platform, you've got a lot more people using Ethereum than the other tokens that are in the market at the moment. So, you know, from that point of view, if they can definitely solve any scaling issues for the future, that will push things further for them. And on that front, I mean, scaling issues occur because things haven't been hit yet. And, you know, we're going to get scaling issues on any new technology, any new market that we see. Of course, we're going to get scaling issues because things like that need to be trial and error tested. Things like that need to happen for there to be a solution to a potential problem. You know, there's nothing that's really come out ever that has never had teething issues in the long-term scheme of things, which need to be changed, whether it's a new technology or a new market or a new anything. Realistically has things that pop up that need to be improved over time. So where, you know, people complain and harp on about, say, what happened with Bitcoin and the fees rising dramatically and things like that, and same thing with Ethereum, but I don't think you can predict in the future how many possible transactions are going to actually occur at any given time to be able to make it future-proof without hitting some sort of benchmark or some sort of problem. So yeah, it'll be interesting to see on the tech front as well. You know, Bitcoin Lightning Network has I saw an article a couple of days ago, and the Lightning Network had increased like 300% or something of adoption. You know, since the last time they checked, or since the last time they did something. just see if I can find the article on it. And this is obviously where the difference between Bitcoin, Bitcoin and Bitcoin Cash, people come into play as well. You know, Bitcoin Cash is basically saying, hey guys, we've got unlimited, or not unlimited, but we've got massive block sizes that can handle the network flow, and then you know, that's the only difference between Bitcoin and Bitcoin Cash. Bitcoin Cash can handle more transactions technically, but from a crypto point of view, if something's going to knock Bitcoin out of the water per se, like for me, it's not Bitcoin Cash. For me, it's another technology. Like there's already other cryptos out there that can do way more transactions than what Bitcoin Cash can, and you know, for them, it's like, okay, we've beaten Bitcoin. It's like, well, there's hundreds of cryptos out there that can transact more than what Bitcoin can. So I'm not really, you know, I'm not on either side of Bitcoin Cash or Bitcoin. I'm a trader. I don't really care. If there's a trading opportunity, I'll take it. So for me, I'm not like all Bitcoin, anti-Bitcoin Cash. I believe there's enough room in the market for both of them. Just trying to find that article. I don't think it was this one. Yeah, you're still heavy in Ethereum? Yeah. Yeah, C20s, yeah. Yeah. I mean, same thing with me, man. Like we're going to be developing a mobile gaming platform soon, which is going to obviously accept crypto and those sorts of things. I've got a lot of planned stuff for my trading side as well, which the token's going to be utilized in as well. So I'm going to have a marketplace with augmented reality, virtual reality items that people can buy and sell with a token, and that token's going to be obviously listed on exchanges like any other token. But again, it's so simple to use an ERC20 token, and for that sort of stuff, which then can transact with any of the compatible wallets like MyEther wallet and all those sort of things. So it's just easier to use an ERC20 token at the moment because everyone knows how to use the stuff. It all comes down to education at the end of the day. So Niraj asks, according to you, if world governments start promoting blockchain, do you think crypto will be left behind? I think both are interrelated. What's your view on them? So my view on governments utilizing blockchain is that it's going to happen. We've already seen the Australian Stock Exchange. We've already had discussions on this from even a year ago. Like the ASX, Australian Stock Exchange, is going to be moving over to blockchain now. So governments and everything else, even other businesses, they're going to utilize blockchain definitely. Like blockchain is an amazing technology that will definitely change the world and will definitely change how things are. Now, just because they're utilizing blockchain, you got to understand at the same time, blockchain is the technology that Bitcoin is based on. Okay, so Bitcoin is not blockchain. Blockchain is not Bitcoin. Bitcoin is a currency built on blockchain technology. So anyone can utilize blockchain technology within their environments. But blockchain technology is not going to be more useful in every environment, I don't think. Things like this moving to blockchain will make it a lot easier for them to be doing things like audits or tracking and that sort of stuff for the ASX, for example. And it's probably a lot cheaper once they build the technology to maintain the technology rather than what they're doing now or however they run it now. I have no idea how they run whatever they run at the moment, but blockchain technology point of view will definitely change how things run. Now, to be specific with your actual question, I don't believe crypto will be left behind once governments start promoting blockchain or using blockchain, because they will be using it specifically for the tasks at hand that they want to improve and streamline. Whereas crypto is obviously a completely different beast. Like, crypto is a form of money, so if they're implementing things like blockchain technology to change the way that they do current stuff, that's not really going to affect crypto per se, if you know what I mean. But yeah, good question. Who else have we got? Anyone else got any questions or anything? Or between questions and stuff, guys, we'll go over a few charting things. We'll go over a few charting stuff. Yeah, they want to use more private blockchain, which is completely fine. As long as it improves their efficiency in whatever task they're trying to improve, that is a very good use case for blockchain, and that's actually good for crypto, because if you think about it, if they're promoting blockchain, people actually tie the word blockchain to Bitcoin, because Bitcoin was the first kind of thing to utilize the blockchain technology, effectively what it's built on. So if they're going around grouping news articles about blockchain this, blockchain that, most people who have heard about Bitcoin or blockchain associate it with Bitcoin. So it's actually, in my eyes, it's actually a good thing, because it kind of just gets the word out there more, and people looking into blockchain, like if we just do a Google search on blockchain, most of the blockchain articles or blockchain stuff that is around there is going to mention Bitcoin and cryptocurrencies. So, if people go, oh, what's this blockchain stuff? They'll actually get pushed into seeing what cryptocurrency is if they haven't heard of it before. So it's pretty cool in my eyes. Let's chat up some FBTC. So guys, for me, with my charting and so forth, I obviously use this TradingView program. Okay, so TradingView is a charting tool. It's not a trade. It's not a trade platform, like it's not a broker. Okay, so TradingView, we'll just go over some TradingView stuff unless anybody else asks any questions. So TradingView, guys, you can obviously sign up with a free link just at tradingview.com. I'll happily post my I'll happily post my affiliate link in here for you guys in the YouTube chat. Now, if you don't have a TradingView account, guys, you are going to need one if you're going to look at trading. Okay, it's one of the best charting softwares, and they've been pretty good with crypto stuff in the fact that if we look at Ethereum, say BTC, you can see the exchanges that are here. So we've got Binance, Bittrex, Bitfinex, Poloniex. They've got Coinbase, Bitstamp. They've got a lot of different crypto exchanges that have implemented into the platform. When TradingView, when we were getting into TradingView stuff, kind of like during late 2016 or mid to late 2016, I started trading crypto. When we were trading crypto back then, like, there were very, very limited charts that you could actually use on here. Most of the trading that I was doing back then was done on Poloniex, and luckily Poloniex, their charts are actually pretty decent. So from a trading point of view, it's not too bad to use something like this if you're a beginner. Now, all my free beginners content is based around how Poloniex works. It can be used on any platform, guys. So in the beginners trading course, which is completely free, okay, on the website, Startcrypto.online, completely free. We go into all the stuff is done, all the technical analysis that I show on there is mainly done on Poloniex because it's a very simple platform. Very, very simple platform. Now, they used to have the #1 volume back then, and we want to trade on the highest volume platform. So now, at the moment, Binance is still #1. So most of my trading now is done on Binance, okay? If Binance doesn't have the coin listed, I do use Bittrex, Poloniex, a couple of others as well. So yeah, Binance is definitely #1 at the moment to be trading on. More volume means more volatility potentially, and more, volatility enables us to, to potentially hit higher sell targets, because the more volume on there means more people are trading it. So yeah, as far as I'll get into your question in a minute, Niraj. I'll just quickly go over with this this TradingView stuff as well. So yeah, TradingView, guys, definitely one of the best trading platforms to be using, and we'll get into some actual charting soon. We'll just answer some more questions. So Niraj, can you tell me something about Power Ledger crypto relating Australia's power? I haven't really been following Power Ledger closely. I did buy into the Power Ledger ICO. I've since sold out of all my Power Ledger, or I might have a small amount of my original ICO Power Ledger still in play, but I've sold most of it off back during the the ICO crazy stuff. So yeah, made good profits there with Power Ledger. I believe they had set up a town or a small group of housing to actually utilize the technology. So obviously with Power Ledger, they're looking at renewable energy projects that harness things like wind, solar, that sort of stuff. And their idea is to be able to share or sell power between different communities. So the concept and the concept and the idea is extremely good. The need specifically for a token lately has become debatable based on the fact that realistically, most of the technology that people are trying to solve with blockchain, most of it doesn't actually need a coin or token, to be used. Now, coin or token for them is great because they get to fund their project. That's what most ICOs have been used for. ICOs have been used to fund projects. There's nothing wrong with that at all. The biggest problem then lies in with what happens long term with their token, whether it becomes attached to the company itself, whether that token is actually used for different things in the marketplace to buy and sell actual renewable energy projects. Like you might even be able to buy a certain amount of tokens and buy a solar farm or buy a windmill project or something like that. I'm not really sure what they've got on for the future, so I'm not going to comment too much on anything specific relating to Australia's power. I know they were definitely testing a small town or city or something with the technology though, so it's good to see. They were one of the first big Aussie projects that actually took off, so it was awesome to see an Aussie project pop up and do really well. Everyone was kind of talking about it at the time. Everyone was kind of doing stuff at the time around that, which was really good to see. ICO days of just developing any project and getting shitloads of money are definitely gone, I believe. which is a good thing. Which is a good thing for the overall crypto market. I have a problem with a lot of ICOs launching. One, there's not really anything in place to protect the end user at the moment from someone scamming or someone disappearing. Like if you launch an ICO, I mean, obviously people do the background checks and all that sort of stuff. There are regulations starting to come into place that, all this sort of stuff, people are getting, legal issues with over certain ICOs and things, which is great to see, because we do need regulation in the ICO marketplace, because you don't want anyone or anything to just be able to pop up a project, take a whole shitload of coin, and then disappear. Basically, we don't want that in crypto, because that just gives crypto an extremely bad name if that sort of thing starts to happen. Okay. And the main reason I don't like a lot of ICO projects, we've had, if we go back to sort of mid to late last year, I think we had about 600 to 800 cryptos circulating, and these are only ones that are listed on CoinMarketCap. So we've got almost 2,100 cryptos listed at the moment. What that does is it spreads our overall market cap. So our market cap, instead of being spread over, 600 coins, 800 coins, which were previously available, we've now got this whole market cap spread over this many cryptocurrencies. So it spreads the whole crypto marketplace a lot thinner. Okay, so if we had some sort of limitation or regulation on this in place, or these sort of things stop popping up everywhere, we would have potentially had another bull run by now, because instead of money getting split and divided between a lot of new cryptocurrencies, because at the moment, we're at a very early phase in crypto. Everyone is kind of trying to chase, trying to think of what the next best thing is that's going to give you a massive profit. And the easiest way to do that is a lot of people are taking gambles on new cryptos, because we see cryptos rise of, potentially tens of thousands of percentages. If a cryptocurrency comes out, a new one, and it's around in 6 to 12 months time, and something really good happens with that crypto, it can jump, insane amounts of money. So people are still doing the same thing, where we're chasing, they're chasing price as far as taking a gamble, taking a punt on a new crypto. And there's definitely nothing wrong with doing that with a small portion of your capital. The problem where people are getting stuck is they're putting a large portion of their capital into a project which could potentially just disappear or flop at anything. You know what I mean? So there's definitely nothing wrong with taking a gamble on a good new project or a good new crypto that comes out that you believe will be a decent project in the future. There can be massive gains had from that. So we've kind of gone a bit off tangent there, but hey, we're going to talk about anything crypto, guys. Anything that pops up in my mind, I'm just going to talk about it if it springs off a question. Do you do arbitrage? No, I don't. I don't really do a lot of arbitrage. I don't actually do arbitrage at all, I should say. For anyone interested in what arbitrage means, it basically means, let's say we'll use Bitcoin as an example. Let's say Bitcoin is trading at around $4,000 US at the moment on one exchange, and it's trading at, say, $4,400 on another exchange. There's a 10% difference there. If you bought at the 4,000 level, you moved it over to another exchange and sold at the 4,400 level, you've made 10%. That's arbitrage. So arbitrage is trading between platforms with a difference of price. I used to do a bit of arbitrage trading, mainly when new coins were getting listed on Binance. So what I did was I followed on Twitter. What I did was I followed Binance and Binance CZ on Twitter, and what you were able to do okay, was obviously they're listing new coins that are not on Binance at the moment. So they would anticipate and list new coins on Binance. Now, when that happened, with Binance being the #1 volume platform, if a coin on, say, I've got Poloniex open at the moment, if a coin on, say, Poloniex will go down to a low coin, we'll just use this coin as an example. You know, this is the only form of arbitrage trading that I really did. If you were able to get on the instant the coin was listed on Binance and go, okay, this coin's going to be listed on Binance. If you were able to get onto whichever crypto trading platform it was on, like let's say it was on Poloniex, if you were able to get on here and you were able to buy that crypto right then and there, and then get ready to move it over onto Binance, you were able to easily make 50 to 100% gain on that coin, right? That was the only form of arbitrage trading I really did, was if you could, and you had to be on within minutes. You had to be literally like on your PC ready to go. If the tweet came through, bang, buy some crypto, move it over and sell it. That was sweet. You got in on that, on that buy. If you were even 5-10 minutes late, it was too late. You had to be literally on your PC at the time, ready to go. So that was the only form of arbitrage trading I ever did. I managed to do it a few times, and it was great, but it wasn't something you could bank on doing all the time because you had to be right then and there to do it. It wasn't something you could sort of plan, if you know what I mean. You had to be on your PC all the time to be able to do that. So, and I don't like to be sitting on the PC all day and all night, so I only caught a few of those moves, which was just pure ass that I was on the PC at the time, doing other stuff, so I was able to catch it. Niraj, I'm a diehard fan of Poloniex. Yeah, I still like the platform. It's a very easy platform to use. The problem is the volume. So volume, users currently online, we used to see this, 30 to 50,000 all the time. The 24-hour volume was huge. They used to be doing almost Binance volumes. They were really slack on their customer support. That's why they've dropped so far off. People don't like when they have to take days or weeks to get tickets answered and so forth. So G1X4R when moon, we will see. I don't really give time frames on when moon. All I can say is it's coming. We definitely will get another crypto bull rush. It's just market cycle. This happens in every market. If you go back to some of the biggest performing stocks, guys, your Google, Amazons, those sort of guys during the .com bubble, okay? Some of those dropped in price 95% plus to where they are now, okay? Some of those stocks dropped 95% or more, 98, 99%, some of them dropped. So, crypto's all doom and gloom at the moment because a lot of people got in obviously during the fear of missing out market cycle, which kind of kicked off, last October. Those few months between October and January were just massive hype, massive pump stuff. Like, everyone wanted to know about this Bitcoin thing because price was going so crazy. You're always going to get corrections in the market. So, things like this are going to happen, gets all doomy gloomy. And then once everyone's complaining about it so much that we're starting to get to that point now. Like, people on Reddit and Twitter and stuff are posting that they're out, the market's crap, it's manipulated, it's a scam, all this kind of stuff. Once you see so many people angry with the market, that's the time to be looking to buy because so many people are so frustrated and they've just sold it. They're just panic selling. They're they think it's all over, and then bang, we get a massive pump happening again when the smart people are like, okay, cool, it's time to buy again now because everyone's angry at the market, so it's all good. 2019 is going to be the year of security tokens. ICOs are history. Yeah, I agree there, man. So security tokens, for those that don't know what a security token is, a security token is basically like an ICO token, but you get a return or dividend based on your security tokens of the company's performance. So it's kind of more like a stock, where you get a return based on what's happening within the company. So I actually like the idea of a security token. Security tokens fall under most laws and regulations in place currently. So it's really good to see security tokens getting that regulation. And I like the idea of the security token where the token that you're holding is tied to some sort of return or value based on that. So the idea behind a security token is kind of like a proof of stake token where you want people to be holding the token to get a reward or get a bonus or get some sort of benefit, so they're not dumping the coin. That's effectively what people are trying to do with security tokens now, which is a great business model, good model. So hopefully we sort of see that stuff in future. Vinny97 gave up on rep. Yeah, I was just on rep just as an example. I haven't really been following rep, so I don't really want to comment much on that front. Just that every coin at the moment is obviously down large percentages from when it originated or where it's been from the last run. It's going to take a lot, obviously, to get back to those previous highs, but like anything, I think in a few years' time or a couple of years' time, we'll be laughing at this market. I mean, Bitcoin has died so many times that there was a tracker or a ticker or something on how many Bitcoin died. There's something like yeah, Bitcoin declared dead for the 300th time. This was at the start of June. Okay, so can you imagine what it's going to be like now? Like with this was from when it was trading at $7,300. Okay, Bitcoin's died. So this kind of thing is pretty funny. So I'll post that in the chat. You guys can have a look at that later on. And yeah, it's all doom and gloom. And then all of a sudden we get a rise in price again, and everything's all cool. Bitcoin's the best thing in the world, yada yada yada. So there's Bitcoin dying. I don't think is going to happen. So yeah, some pretty funny stuff in that article. Have a look at that when you guys get time. Sorry guys, type into web devs. So question again from Niraj. Thanks for the questions, man. I'm happy to keep answering them if you got more as well. So this is good. I like this. Question: if a newbie wants to invest in crypto, what percentage of portfolio would you keep in crypto? Invest in crypto. Are you talking overall monetary terms, in terms of, like, let's say you've invested in stocks or bonds or fund indexes or something like that? Let's say, are you saying 10% of your entire investment portfolio is crypto? For me, I've moved completely out of other investments as far as monetary terms. 100% of my portfolio is in crypto as far as investment wise money. Well, not 100%. I do have some. I do have a small amount of stocks and that sort of thing that I keep an eye on and trade as well. But majority for me is in crypto. I do have a couple of businesses on the side as well, which are normal income generating businesses at the moment. So majority of my portfolio is in crypto. Now, for someone else, it purely depends on, I think, what they want out of crypto, or if they're even invested in something else. I would always say put a small amount of your weekly earnings or monthly earnings or whatever you've got into crypto, and start growing a portfolio for crypto if you're not in crypto currently. There's nothing wrong with someone who, say, doesn't trade, for example. There's nothing wrong with someone buying crypto, even at current rates, Bitcoin at current rates, to say, to start scaling into crypto. If you're putting $25 a week, $50 a week, $100 a week, or whatever into crypto, and that's only a small portion of your earnings, that's fantastic. You're investing in something. So I'm very big on investing in stuff now, knowing what I know now. I'm 33 at the moment, and knowing what I know now, if I knew what I know now, say 10 years ago, 15 years ago, I would be in an extremely, obviously, better off position, because instead of buying things that I don't need, instead of spending or wasting a lot of money, I would have invested in things previously and made more along the way. So, do you think Brexit approval by Europe has an impact in Bitcoin price? What, according to you, are the main reasons for decline in Bitcoin? So there's a number of reasons for the decline in Bitcoin. I haven't been following the Brexit thing. Brexit has been going on for so long that I was trading Forex when Brexit stuff was getting talked about, and that was like a couple of years ago. That was like almost 3 years ago. Brexit stuff was talking about. So, this Brexit thing is like a massive ongoing thing. So I don't really have much comment on Brexit itself, but Bitcoin price decline is more so, from a technical analysis point of view, is the main reason for the decline. Just actual trading. Anyone that gets in, and the other reason trading has become more relevant is you get traders coming from other markets now looking to trade Bitcoin, because when we have massive pumps like we just had, they can take advantage of the shortfall, of the shorts of Bitcoin. They can trade it. You can trade Bitcoin either way. So from a trader's point of view, the main reason for the decline in Bitcoin is mainly just traders taking profits. The other thing is, you've got, even at current price, Bitcoin is 10 years old now. You've got anyone from the previous 10 years of Bitcoin, anyone who bought before August last year is in profit. So any of those guys who are getting panicky about the market, because anyone previous to this, if anyone's bought, 2016, 2017, anyone in that period has been buying between, $400 to $1,000 per Bitcoin, they're still up 4 times to 8 times, even at current price. You know what I mean? So even if those people are getting panicky about Bitcoin price now, they're still selling for 4 to 8 times price of what they bought at. So for them, it's still been a massively good investment, regardless of whether they're selling now or whether they're selling later. So I don't like to speculate on time frames and things, but once we start getting new higher highs and higher lows again, we break out of this sort of range. That's kind of when, for me, we're looking at kind of bull market time again, or potential bull market time again. But you know, there's so many reasons why Bitcoin price can be coming down from a technical analysis point of view. The fundamental analysis point of view has also lined up with the decline in Bitcoin based on the fact that through these periods of time, you could still be mining Bitcoin for small profits as the network difficulty goes up. Now we've had difficulty Bitcoin. Last time I checked this, it was 10 times 10 times network difficulty increase in the last 12 months. Obviously, the difficulty on Bitcoin itself has dropped off based on... So this is hash rate. So hash rate went from... Now this is the end of 2017, say November 2017. Hash rate spiked from, you know, let's say mid-November, you got about 5,000 petahash to, you know, over 50,000 petahash, like 55,000 petahash. That's like 11 times the network hash rate in a year, and that's in November as well. So it was still up there at November. So November, mid-November to mid-November, you know, we're looking at 11 times the amount of hash rate. Now that also increased the difficulty by 5 times. So the miners who are mining at the end of 2017 are now getting 5 times less Bitcoin for the amount of their mining that they're doing. Okay, so the price of mining has increased. The price of the coin has been decreasing. So we're coming down to that, you know, that break-even level. And we hit that break-even level at about our 6K level, which we were at for the last, you know, 4 or 5 months. So 3rd of February I wouldn't count as the mining difficulty period because that was just our low, because we spiked back up there to almost 12K. When we got to this kind of period here, June until mid-November, that was kind of our break-even Bitcoin price, right? And the decline happened again when we did the Bitcoin Cash fork once again, bringing the fundamental break-even price down to almost where we are now. So from a fundamental point of view, from a technical point of view, we've got technical analysis telling us we're going to go lower during most of this period, especially from, say, here. This period here was like, well, you know, this could be the start of our new run, but obviously once we got the double top and the massive sell-off back down to this level again, this was the start of our beginning of lower highs, okay, and our lows being around this zone. So this period here was our real, like, okay, yes, we're in a, from here, here, and here. This was like, yeah, okay, we're in a bearish cycle. Now, this stuff was just all pure profit taking, you know, anyone selling off or whatever. Now, so our fundamentals now line up with our technicals to say, yes, we're going lower. We've got down to this point here. From here, it's like, well, what happens? If we go back to this Bitcoin mining calculator again. Now, the other interesting thing that's coming into play with obviously the Bitcoin mining side was Bitmain announced their S11 miner which I worked out to be, they didn't specify, let me see if I can find the stats on it again. They didn't specify, how much hash it was going to do for the wattage, but I worked out it was 2.5 times more efficient than the S9, based on the fact of they rate things in this this joules per terahertz. Now that may have changed because efficiency. So see how this is 93.12 joules per gigahertz per hash. Now gigahertz, you've obviously got 1,000. So you've got move the decimal place 3 times to get a terahertz. Boom, boom, boom. So we've got, so the efficiency on one of these things is 0.093 per terahertz. Okay, so 0.093 per terahertz. Let me see if I can work this out again. 57 joules per terahertz. So this big bonker, last time I looked at this, I think it showed 35 or 40 or something for it, but they were single units. They weren't this double unit. They were like they called it the S11 or something, and the S11 was just a single unit like the S9. Now these obviously big double units are just to take up two side slots and the power above it. Like most miners, you see the power above it or beside it or whatever. So it's more of a space saving thing as well. Now this thing is, so 2 of them, that's about double of what an S9 is, but the efficiency is much better. So that's about 6 times more efficient, or about 5 or 6 times more efficient as far as electricity consumption is concerned. So, you know, because we're going from a 16 nanometer chip, which is the size or the power of the chip, to a 7 nanometer chip. So 7 nanometer is obviously much newer technology. S9s have been out for many years now. So going from 16 nanometer down to 7 nanometer chip, which is what most new CPUs and stuff are using, that's obviously highly more efficient. So the hash rate power is not necessarily more, it's just the electricity efficiency. So, you know, if we were to speculate around 5 times less power usage, you know, if we're looking at 1400 watts divided by 5, say 280. Now this is probably not exactly correct, but even if we go half of the power for double the hash rate, if we go 28 terahash at 700 watts, you can see that their profit per day is starting to increase again. Okay, once all these miners are rolled out, now what these guys do is where was it? S15. What these guys do is they obviously have their own production running of these units before they sell to the public. Okay, so they're if they're willing to sell to public, so estimated shipping for these is December 20th to 31st. So I would dare say that these guys have already got these in production running at the moment. 2 miners per user, blah, blah, blah. And again, like any of the first miner batches that come out, they are definitely profitable. I probably won't be buying any of them myself. I've got into a couple of the first batches, like the Z9 minis and so forth. I got into the first batch of those, which have been very good, very profitable, which is great. But I don't see myself buying, more miners again at the moment. Even at, let's put in price per kilowatt, 16 cents US. So that for me, at current market rate, if we were to mine Bitcoin still at 4.1K US dollars, if it was using half the power rating and price per kilowatt for me, it's about 16 cents US in Australia. We're one of the highest electricity countries in the world, which sucks. 16 cents per kilowatt, I'd be looking at about $1.59 per day. $1.59 per day, what do they cost? $1,400. You're looking at 1,400 days. But obviously you're not going to be selling, if you're mining Bitcoin, you're not going to be selling, or you're not going to want to be selling your profits daily. So you're mining 0.001 Bitcoin per day. So long-term mining is obviously the game plan. If you can stack up a bunch of Bitcoin, pay it out of your pocket. For me, obviously I don't have another fiat income, so I would need to be selling off at least once every 3 months to fund my mining. So for me, at these current rates, it's not really worth to cash out of crypto, first of all, to buy at this rate, and then to also have to pay the electricity at that rate. So for me, new mining at the moment is not really on the cards. But mining difficulty and miners can definitely, based on fundamentals again, once these new miners come out, we can definitely, for Bitcoin to be break-even cost, we can definitely head lower again. There's a potential for us to head lower from a fundamental point of view as well. So this is the first time we've kind of seen, Bitcoin actually be kind of on the verge of like break-even mining profits. Apart from during that 6K period, we're kind of getting to that period again where there's a potential for Bitcoin to be break-even for miners at the moment. Now, that doesn't take into consideration anything to do with renewable energy, if they've got large solar plants or solar setups or hydro energy or all those sorts of things. This is just based on pure paying out of pocket cost per kilowatt. Okay, so if they've got renewable energy sources and they're not paying for a certain amount of power and they're still getting power for this much, obviously their break-even price becomes a lot lower again based on how much power they're getting. Okay. So from a fundamental point of view, we can head lower as well. So shout out from Crypto Australia there. Someone's commented on the post. Tone Vayers recently in Australia. Yeah, he was in Australia. Actually had the opportunity to go to the event which he was at. I kind of wish I did. But I missed it. I had some other stuff on. I had my son with me as well, so I couldn't really get someone to look after him, so I could head in. But kind of wish I'd got to go. Would have been cool just to have a chat with him, or even go to the event. So I do go to quite a few regular events in Australia, which is really good. I can't really comment too much on that. He's obviously he's obviously very bearish on Bitcoin. He has been, and he's been correct, obviously, since he's been posting about it. So he kind of got screwed over with, I think it was BitMEX. he lost his account or something, and he had a crap load of affiliate. He had like 800 or 900 affiliates making bank on, so he would have lost a lot of income out of that. Do you know of any daily usage of Bitcoin? When you say daily usage, what do you mean specifically? Do you mean of like companies accepting Bitcoin, for example, or one of the largest ones in Australia at the moment that I know of is a company called Travel by Bit. Now, these guys have actually set up Brisbane Airport to accept cryptocurrency, and they set up the first town in Australia, Agnes Waters, town of 1770. I should actually upload my video of this as well. So I went to this town and stayed overnight, you know, on a road trip, and paid for Ethereum to stay in the to stay at one of their hotels. It was a pretty nice hotel. It's a lovely town, lots of nice people, and they accept crypto in majority of their, you know, pubs and places you can stay and all this sort of stuff. So this is pretty cool place. Very beautiful place. Nice beaches. Nice nice weather. And Travel by Bit is one of the places who set them up, and they've set up Brisbane Airport as one of the first airports in the world to accept cryptocurrency as well. So the cool thing is a lot of this, I know some of the people who actually run this company and develop for this company as well. So the cool thing is, being where I am at the moment, is I get to go and meet a lot of these people who are actually doing worldwide stuff for all things crypto, and it's really cool to see where I've kind of come into the market, where it's kind of started, where you couldn't even transact with stuff, to being able to spend crypto at, you know, places all around the world, which for me is obviously helps bring market adoption, which is what I'm trying to do. I'm just trying to bring adoption to crypto, help people out who are interested in crypto. You know, again, with the site that we've got here, like we've got a completely full course, absolutely free. Like who else has given you a whole course for free? Like, you know, I'm interested in helping a lot of people be able to get in line so they at least know what to do during the next bullish run. Obviously, we're in a bearish market cycle. The market at the moment is really quiet. It's really, you know, not a lot of people who are following a lot of crypto posts and so on and so forth. So the market's very quiet at the moment. But yeah, completely giving a whole bunch of stuff away completely free. Just to shout out some websites where you can use crypto. You can use crypto on my website. You know, if you're interested in the subscription-based stuff, we're also going to have a full shop on here. So we're going to be doing a bunch of crypto shirts and things. So you're going to be able to buy crypto shirts. At the moment, because we've just launched the site, we've got a massive sale on 3-month subscription for only $25. Okay, that gets all the advanced content and all of my live trading sessions, which will be sessions kind of like this, where we just go over anything to do with crypto. It'll mainly be trading stuff where I go through how to set up trades, how to set up a watch list, all that sort of stuff, how to update your charts and everything, which I'll get into a little bit later once, you know, if it gets a bit quiet in here. But you know, we're gonna have shirts. We've got a forum as well. So we've got private forums, which is basically going to be forums that relate around crypto stuff. Okay, all subscribers get access to that for free, or you can just buy, you know, forum access. The reason why it's a paid thing for the forum is obviously we don't want spammers and bots and all that kind of crap to be in there. So it's going to be a full-on content place where anyone can talk and discuss crypto, anything to do with crypto, on a forum and everyone else that's there is specifically there for crypto, and they've done the same thing. Okay, so it's not going to be all this spam crap. There's not going to be a lot of trolls and stuff on there because they have to actually pay to get in there. So people who are in there are going to be posting or looking at content which is relevant to anyone to do with crypto, anything to do with crypto. But yeah, we're going to have shirts and everything available in here. We're also going to have a marketplace. We're going to be developing a token for another platform, which is going to tie in with this platform as well, where we're going to have augmented reality and augmented reality and virtual reality items available for sale in a marketplace on this site. So, you know, even if we I'll show you all the cryptos that you can spend here. It may not let me actually add this because I'm already obviously a member, but I'll just see if I can show you the cart. So if we go proceed to checkout. So I've got coin payments set up on here. Let's just go 4,000. I've got coin payments set up on here. So if I go place order here, street address, place order here. So coin payments, if anyone else out there is looking to implement crypto payments on their own site, coin payments is definitely my recommended choice. So in here you can choose all of these coins. You can pay using any of those coins. Very simple process, very easy. Coin payments is very good as well in the fact that if you pay too much, you get refunded the difference. And you can pay the total with multiple wallets. So let's say you choose Litecoin, for example, and you've only got, you know, half of the amount in one wallet, half the amount in another wallet. You can send the total from 2 different wallets or 3 or 4 or 5 different wallets. As long as the total matches up, the payment goes through. So that's really cool functionality. So coin payments is definitely, if you're going to look into set up a shop or anything to do with crypto to accept payments, coinpayments.net is definitely the way to go. So we'll just close out of that. Just cancel that. Vinny, guess I missed the how to update charts, how to set up a watch list, what coins to focus on, part of the presentation. Haven't really missed it. We kind of went into it a little bit, mainly just on Bitcoin price alone. So we'll get into it. We'll get into that more very shortly. So stick around, we'll get into that once we are. All I'm doing is just kind of going over the questions and stuff. If you want how to update charts, how to update a watch list and stuff, half of what I actually go over is in the beginner's course on Startcrypto.online, and you know, all this stuff is completely free on the website, and you can go through the videos at any time you want, basically. So check that out as well. Now we'll go over something like FBTC on how to update, let's say, a chart, how to find support and resistance levels, that sort of stuff. And this is obviously on Binance specific, so we're only going to be able to go back to, you know, mid-July 2017, which is perfectly fine because that's before our kind of massive bull run. It has most of our main levels in there. And Niraj, I'll go over which indicator to use for trading. Try to use only one indicator. Bollinger Bands, yeah, I do use Bollinger Bands a little bit, but I'll go over the indicators and stuff that I mainly use. So let's just crank into this chart and let's just have a look. Set some support and resistance levels. Now, when you're setting support and resistance, guys, you want to have a look at where price is bouncing, where price is reacting a lot of the time. So this chart is obviously based on Bitcoin price to Ethereum price. So this is not Bitcoin US dollars or anything. This is Ethereum BTC. So if you're trading on, say, Binance and you're buying Ethereum with Bitcoin, this is the chart to be using. Okay, so what you want to be doing is looking where price is bouncing and where price is touching a lot of the time, and you want to put into consideration the most recent price action first. Okay, so if we have a look down here, you can see we're starting to get price. Price has bounced off here. It's coming back to this level again here. And it's also bounced off it back here as well. Okay. So for me, you want at least 2 touches, 3 touches or more is obviously better. So I don't put too much emphasis on something if it's only had 2 touches. You want to really see 3 or more. So let's go ahead and put a horizontal line in here. Okay, where price has bounced off. And that is, as price is coming down, approaching, that's called a support level, okay? If price was heading up, that's a resistance level. If your line is above price, it's a resistance level. If price, if your line is below price, that's a support level, okay? So when people talk about support and resistance levels, they're actually the same thing as far as there's a line there. So don't confuse yourself too much and say, oh shit, I don't know which is a support and a resistance level, which one's which. As long as you see price bounce off that place multiple times, that's a line of interest. That's a point of interest in price, okay? So this is a point of interest that we want to watch at this level as we're approaching it. If price is kind of, you want to look for price where it's most relevant, okay? So price has come down to this level, it's bounced back up, it's come back down to test on the level again, which is this same level here. So this price point here, okay, this price point becomes a price of relevance from this point. We have never touched this price point again until mid-September, right? So now that becomes a potential support level, because back here that was a new low, right? We really never saw price come back down there. That was a new low as far as Bitcoin, Ethereum was concerned on Binance, okay? So if you're charting on Binance and you go, okay, cool, that's our low point. So there's a potential for price to come back and retest that low point, okay? Which it has done. It took a long time to do that, but it has done, okay? So another price level of interest. You want to mainly trade around, you want to mainly chart around what you're watching at the moment, okay? So if we have a look here, okay, there's a level here, there's a level here where price bounced down to touch before we broke through it, and that level also lines up over here with this price point and these points as well. So this price level, we can put a new line in here, which is kind of touching all those lines, okay? So it's touched there, it's touched there, it's touched here, it's touched back here as well. Okay, so that's a great level to have in play. Now that automatically right there gives us a level of trading, right? A level of trading to trade within, okay? So if price comes back down here and we get a similar pattern of this, and price bounces up, this is potentially where price is heading towards, okay? Because price reacts based on different levels, different zones, okay? If you wanted to get really picky and you wanted to look to trade within a zone, you know, we could take this level into consideration here. We could say, okay, anywhere between these price points, as we've got a touch, you know, touch here, touch there, anywhere within here could be a potential take profit zone if you got a reversal from down here looking to trade up to this level. You could take profits between anywhere in here, okay? Because we've got, this is our recent high. Okay, we're now forming our recent low. And if we bounce off around here, if we get a similar pattern like this, we could come back up and touch these price points again, okay? If we break above that, and we look to trade above that, we then look at our next price point, which has had the most sort of touches. You can see touches here before it accelerated, price took off again. So there's one here, this stuff is kind of noise in between. We've broken through, come back down. Price points here, and we look for a recent price point over this side as well. So we've got this price point here, which price bounced off. This price point here, which price came back up to, and then we go lower again. So you can kind of go anywhere, any prices between here and here, okay? So we've got another potential trading spot around here. We then add more lines on our chart. We've got a good level here as well. So price came down here, bounced up, came back down here, retested that price point again, and then we broke through it. Okay, we've got that touch here, here, and here before a massive acceleration. So this to me is obviously standing out a lot. Okay, so again, that's another good line. Good price touch there. 1, 2, 3, 4, 5, 6, 7 touches of this line. So that's a good support and resistance level, which is at a nice round psychological number as well. 0.055. Okay, massive psychological number. You'll see majority of these prices coinciding with round numbers as well. Okay, so if we've got 3 levels on our charts, that's plenty. We don't really have any levels lower. I mean, if you wanted to get really picky, you could have another price level right down here. If we broke through this level to test this level here again. Okay, I'm just gonna check this, make sure everyone can see that, because I've got a little banner down the bottom of my screen. Oh yeah, cool. Yeah. So yeah, price point, if we broke below this level here, we could potentially target this level here. Again, if we broke below this level, there's no way in hell I'm looking to short that market. You're not looking to short any of that sort of stuff because they're new lows and stuff. So which indicator do you use? I'll go over my indicators in a second. Question relating trading, do you keep stop loss? What is a safe stop loss to keep? So yeah, on most trading, I do keep a stop loss, and you can move the stop loss as well via limit orders. And do you teach candlestick patterns? Yes, I do. So most of the main indicators that I use are both of these EMAs. Now, if you want to add them, this has changed around a bit. Indicators. So up here, you used to be able to just right click and go add indicator. But there's an indicators option up here. So go to indicators. Now, this is called an EMA, which is a moving average exponential. So you click on that, it adds it to your chart up here, and you can go in here to the settings option, the format, and you can change the time frame. So the length I use in here, I use 1 on 50 and 1 on 200. Now, from a professional trader's point of view, those are the most commonly used EMAs across all marketing trading. So not just crypto, across Forex, across stocks and everything as well. They use those same time frames. So what happens with technical analysis is you're trying to get the same outcome as other traders. You're trying to see the same thing as other traders. So when people start adding weird ass indicators that they've made up themselves on their own charts to justify how the market is moving, other traders are not seeing those indicators because they've made them up themselves, or they're some sort of weird indicator that has like 10 different things built into one, and they justify it based on price because they see the history and they say, oh, it touched there and it touched here. Unless you can use it to see things coming up, all indicators are laggy. So the first thing you need to take into consideration is current price action as far as candlestick patterns. And then you want to add your indicators in as points of confluence. Confluence is basically the more things that line up in your discretion for the trade enable the most possible outcome. Okay, so no trade is ever going to be 100%. You're not going to look at a chart and say, this is definitely going to happen. you know, based on this and this, because it's technical analysis. It's you trying to line yourself up with other traders in the market who are looking for the same thing, who are looking at the same thing. Okay, so the two EMAs I mostly use are, now, I think with the free version of TradingView, you're only allowed 3 indicators. Now, if I was to choose just 3 indicators, I would probably use the 50, the 200 EMA, and RSI, which is Relative Strength Index. And that gives you an overbought and an oversold zone, and that can come into play on longer time frames during, say, sell-offs in the market, or when the market moves bullish, for example. It gives you a rough graph on where to show, you know, where price is going to potentially turn around. So 50 and the 200 EMA. Now, the reasons I use those are, again, they're the most commonly used EMAs in the marketplace. You get things like this happening. Okay, so this, let me change this color really quick. Style, let's go with a really bright color. Okay, so the green one is the 50 EMA. Now, what the EMA stands for is, as I said, exponential moving averages. What that means is whatever time frame you're on, these obviously adjust with whatever time frame you're on. It means 50 price points as an average becomes a line. Okay. Now, on a longer time frame, generally when price is below the 50 EMA, it acts as a potential, you can use these as support and resistance, like dynamic support and resistance levels, because price can bounce off these lines. As you can see, you know, price is hovering around these lines. Price comes back up to kind of test these lines, and price remains below these lines. So it's still definitely bearish. So this is a 50-day moving average. This is a 200-day moving average. Now, what you get on long-term trade setups is things like this happening when the lines cross. Okay, what these are referred to in the marketplace, you might have heard them as death cross is when the line is breaking below the 200 EMA, the 50 is breaking below. Golden cross is when the line is breaking above the 200 EMA. Okay, so what a death and a golden cross generally refer to, generally impact or show impact with price is when price changes a relatively large amount, or is an ongoing cycle. So you see here with this death, this is called a death cross because the line is breaking below the 200 EMA. Okay, death cross is a bearish pattern and golden cross is a bullish pattern. So you see with this cross here, obviously we've bounced off this price point. We've got a golden cross, so you know price is bullish here. That shows bullish pattern, but you need to take the other things into consideration as well. You need to take, are we making higher highs, higher lows at this price point? You know, at this price point, we were not making higher highs. We made a higher low, but we're not making higher highs. So for me, this price point, this golden cross is not necessarily a long-term thing or a long-term reinforcement until we start to get higher highs and higher lows, which we only made, you know, one lot of higher highs. We didn't even make higher highs. We made one lot and we broke back down. So when we've broken back down through price here, this becomes more relevant because we're already bearish. Okay, we're already bearish. Price is broken back down below. That's perfect setup of what a death cross or a golden cross will show in its market sentiment. Okay. And you can see here, price has been below this 50 EMA the whole time. We got a test of the 50 EMA here, and price is still broken back down below it. So this becomes dynamic support and resistance. Right? 50 and the 200 for a long-term trade perspective. So those are my most two commonly used indicators. I do use also, I do use Bollinger Bands myself as well. Okay, basically just as a market, just as an extra point of confluence. So let's say I'm looking at a bearish setup in the marketplace and price comes up and bounces off, price comes up and bounces off either the top of the bullish Bollinger Band. If price gets to the top of the Bollinger Band, that generally means it's almost the same thing as relative strength index, to be honest. It basically means the band is being hit at the top or the bottom, and that gives you your relative strength index as well. So you can see here, the band is being hit at the bottom, we're oversold. The band is being hit at the top, we're overbought. Okay, the band is being hit at the bottom, we're oversold. So I don't really put much emphasis on Bollinger Bands because I already use RSI, which is relative strength index, which gives you basically the same thing. So if you only allowed 3 indicators in price, depending on how you want to set up your charts, you can either use Bollinger Bands or you can use relative strength index, RSI. To add RSI is the same thing, indicators at the top, just RSI, relative strength index, click on it, and it'll give you this RSI. And 14 is the default, guys, so keep it on 14. I see people changing RSI to all these sorts of different numbers, but if you just default add the pattern, it comes as 14. So what that means is majority of people are going to be using it on 14 because people aren't going to be just adjusting it to whatever the hell they want. They're going to watch it on the time frame that it's meant to be used at. The default is 14. Most people are going to be using it on 14, so I keep it on 14. Okay. The other indicator is that I use is a volume indicator. Okay, so again, you can use volume, just straight volume. Okay. The thing with the volume indicator is it just shows you volume either in positive or negative. Okay, so it'll either show you majority of a bullish volume or majority of a bearish volume. Where this volume indicator comes into play is how much volume it takes to move the market. Okay, so Ethereum is probably not the best one to show. Let me see if I can scale. Hide MACD for the moment. Let me see if I can make the volume one a bit bigger so you can see what I'm talking about. Okay, so the volume is like, the way this indicator works is it shows you how much volume is required to move the market, right? So if we have, so these two big red volume bars here are bearish volume, which are these two candles here. So all of that volume moved the market that far, okay? Then we had a massive, had a big green volume candle as well. It only moved the market a tiny pipsqueak of what these candles moved the market. So that kind of indicates that it's going to take a lot more bullish volume to move the price than what it does take to move the market bearish, okay? That's the only reason I use that volume indicator. I don't put much emphasis, again, on the volume indicator. I put all of the indicators together. So let's say all of my indicators are lining up. Let's say we're bouncing off the 50, we're bouncing off the 200. RSI is like oversold. The volume indicator is showing that it's only taking a little bit of green volume to push the price high, that sort of thing. That could be a bullish setup for a signal. But I use it all together. So I don't just go, okay, cool, we're oversold now, we're entering the market bullish, because that doesn't work. You can't just use a single indicator to buy or sell price. You need to put them all together along with candlestick patterns. So candlestick patterns themselves are the most, what they call price action. Candlestick patterns are the most, you need to put your emphasis on, because the candlestick pattern shows you what has happened most up to date in price. Okay, all indicators, no matter what indicator it is a laggy indicator. When I say laggy, I mean, this 50 EMA, for example, is an EMA of the last 50 price points. It's an average of the last 50 price points. We want to know what's happening in the market now, okay? Which you get from looking at your candlestick patterns, okay, and what's happening in the market now. One of the biggest trading opportunities I take is focused around bullish and bearish engulfing candles. Okay, and what a bullish or an bearish engulfing candle is when price, and this is done on mainly higher time frames. So you spot your entries obviously on the higher time frames, and you use the lower time frames to time your entries. Okay, there's no way in hell I'm just looking at like a 15-minute chart and I'm like, okay, cool, there's a head and shoulders pattern or there's a reversal pattern for me, I'm going to trade it. Because 15 minutes realistically means absolutely nothing in the grand scheme of things. You really need to be scaling down from your higher time frames through to your lower time frames to spot entries. Okay, so let's say we get a setup on, sorry, I was just talking about the candlestick pattern. So, bullish and bearish engulfing patterns for me are the best. For me, as a confirmation that my trade setup that I'm watching has taken place, and this right here is obviously not a setup that I took per se, but this is what a bearish engulfing pattern is. So a bearish engulfing is when you get a small up candle followed by a large down candle, which basically it's called an engulfing pattern because the candle is much larger than the one that it's just taken over per se. And a bullish engulfing is the opposite, obviously, when you get a small down candle followed by a large up candle. So that to me is my best confirmation of price candlestick pattern that I follow, which is what I love the most. I'll just quickly check these. So we've gone over indicators. Question related to trading: do you keep stop loss? So yeah, stop losses. I do trade with stop losses. There is a video in the free course, okay, with how to use stop limits. So if you're interested in stop losses and stuff, guys, Startcrypto.online. Sign up for free. Okay, completely free. This is a completely free course. Under trading content, beginner's course, video 6 is how to use stop limits. Okay, this is when you're trading Bitcoin to any other altcoin as well. So don't be scared to sign up there and join for free. Candlestick patterns are also in the free course. Which one is it in? So video 2 in the free course, I go over support and resistance, which I've just been showing you guys how to do. How to do these support and resistance levels, which are these red lines. Okay, so that's all in the free course as well. How to read candlestick patterns, I do have in there about bullish and bearish engulfing patterns, and best reversal patterns to use. So I do delve into head and shoulder patterns and inverse head and shoulder patterns, which are these things. So head and shoulder pattern is when you get something that looks like this. Let me see if I can find like an absolute perfect one. Pretty good one over here, even though it's just a candle wick. But so head and shoulder pattern is basically like this. So this is your head, And then if you can imagine a body, head, two shoulders, and a shoulder, and a shoulder. So a head and shoulder pattern is a bearish signal. An inverse head and shoulder pattern is basically the complete opposite, which is like this. So inverse head and shoulder. Head is obviously, think of someone doing like a headstand. So shoulder, shoulder. And as you can see from that pattern, we've gone bullish. So that's an inverse head and shoulder pattern there to go bullish. So things like these, the head and shoulder patterns are reversal patterns. So if you were lining this up with other forms of confluence like this, we just bounced off our support and resistance level. We've come back up. I also use Fibonacci retracements a lot of the time. Okay, if we draw a Fibonacci retracement on there, the most commonly used or the best Fibonacci retracements to look out for are the 50 and the 61.8%. These other ones are obviously relevant as well, but most people are looking at the 50 or the 61.8. 38.2 is relevant in the terms of if price only comes back and touches the 38.2, it means the potential for the upside is much greater. And then that's when I use fib extensions. That's used for like taking profit levels and things like that. I teach some of this stuff in the begin, most of it in the beginner, some of it in the advanced. Obviously, that's where the subscription comes into play, and then we do live trading with the subscription as well. So that's when I go over all this sort of stuff on how to stay up to date with current watch lists, current coins that I'm watching, current upcoming opportunities, that sort of stuff. Now, they're the most commonly used patterns I use in form of confirmation. So head and shoulders and bullish and bearish engulfings. You obviously then get things like we had on our Bitcoin US dollar. You get things like drawing trend lines to form triangles. Triangles are extremely good because once they get to the end of the triangle, they have a breakout, and generally the breakout is, regardless of whether the breakout's up or down, once you start to squeeze the triangle, once you start to squeeze price into the triangle, it goes either way. Okay, so things like triangle patterns are very good. This is obviously a bearish triangle pattern, as this line here is more of an angle than this line. We've got support and resistance as well, zone here. So that's kind of what I use mainly. So I use a lot of support, and if you were to emphasize on top-down kind of stuff, highest time frames, then you want to look at support and resistance levels. You want to look at trend lines, and then you start to add in your other things like your reversal patterns, your head and shoulder patterns, your bearish, bullish engulfings. Then you start to add in your indicators and stuff. So I don't trade purely with just indicators. Most of it is done with pure price action first. And again, sometimes you may even, you might even have to just quickly check your charts for like 5-10 minutes, and then you're done for the day. Because if we're in a zone like today, for example, with this Bitcoin price, like there's no trade setup here for me on this Bitcoin price at the moment until we either get back to around this level here. Then I can look to either short the market, or if we break out above this and start forming higher highs and higher lows, I can start to look to take long positions on it. But right here where price is currently, there's no way for me to look for. I could find a trade, but it's not going to be a very good one. And the chances of the outcome happening in my favor are less than being patient and waiting for the opportunity to come up to where I'm looking for multiple things to impact price, not just something small. Like if we scroll right down on this time frame, if we look for like the 1 hour chart, we can obviously see stuff starting to form. Like you can kind of see a inverse head and shoulder pattern here. This is on 1 hour. This is 1 hour time frame. So in the long term of things, 1 hour means nothing. We've obviously got a bit of an inverse head and shoulder pattern here on the 1 hour time frame. Am I trading that? No way, because we've just hit a new low. And when you zoom out to the higher time frames, there's more potential for price to go down from here than there is for price to go up. So if we look at like a weekly time frame, last week we've just had a massive bearish acceleration candle. We've started here, then we've accelerated this week. We've accelerated again this week. For me, on the weekly time frame, I want to see a decelerating candle. Okay, as in a candle, like if we form the whole week and that candle stays like that, and then we start to see higher highs, higher lows, and bullish engulfings, you could possibly trade back up to this level. Again, I probably won't be doing that unless there's some sort of crazy setup that just looks really good. But probably, I can tell you right now, I probably won't be doing that at all. For me, it would be better to see us come back up to price here, see a decelerating candle from here, then confirmation to the downside to trade back down to this level. Okay, so it's all about patience, confirmation, and looking at the higher time frames to see the overall view of where price is. Because if you go looking on your charts and you're really hunting for trades, I can guarantee most other people in the marketplace are not seeing the same thing as you, and the chance for that to play out based on technical analysis is not going to happen. Because if you're hunting and you're looking so hard for trades, the other people are not looking that hard for trades. They're waiting, being patient, and they're looking for optimal setups that you can make a good play from rather than an extremely risky play. Okay, so patience is definitely key when trading, guys, as well. Now, we've gone over stop losses, indicators, and candlestick patterns. If you're using a P2P pair like BTC, Bitcoin Cash, SV, even if one goes down drastically, overall result is a loss. How to tackle the problem? It goes down drastically. If you're trading Bitcoin Cash SV, for example, and we can do this on TradingView again because we've got our chart here. Now, if you're trading, for example, I just don't like how we've only just published, so we can't use a high time frame to show you. Now, when you say how to tackle the problem is, regardless if Bitcoin goes down or Bitcoin SV goes down or whatever, when you're trading between Bitcoin pairs, generally, if Bitcoin crashes, like if Bitcoin, go over here, if Bitcoin drops in value, okay, generally the price will go. Now, when I say drops in value, I mean like larger percentages. If Bitcoin drops in value a large percentage, generally the coin will drop as well. If Bitcoin goes up a high percentage, generally the coin will drop as well. You get your best times trading Bitcoin and altcoins when the market is going through consolidation periods. Like when I say consolidation periods, I mean when price is not really moving that much. So during periods like this are good times to trade altcoins and stuff because the Bitcoin market itself is not really moving that much. So it depends more on what the altcoin's doing. When Bitcoin's moving a lot, the altcoin, it doesn't really matter as much because Bitcoin is what moves the market the most. Bitcoin is what moves the price the most. So when you say how to tackle the problem, or the overall result is a loss, you basically just need to look for another setup again. So you need to be patient. If you've had a loss, you know, you only learn from losses. You don't learn trading from winning, because when you're winning, you're happy, everything's all cool. When you lose, that's the time to soak in the emotions from the loss. So you're going to get emotion when you lose trades. That's a good thing initially when you're learning, because you need to be able to control your emotions. You need to be able to control your loss. Otherwise, what's going to happen is if you lose a trade and you get emotional, you're going to start looking for more trades, okay? You're going to start looking for trades that aren't really there. You're going to start jumping into trades that aren't really a good optimal setup. It's going to cause more loss on your portfolio. So you don't want to just be emotional trading. So again, losing trades teaches you to deal with the emotions, teaches you to be patient, teaches you to look for those better setups in the market, which is where the patience comes from. If you're trading this sort of market, the stop losses can come into very good play. Like let's say you got in on this move here, okay, and you opened it at say this price, and price moved all the way up to here, and you go, okay, cool. I'm not yet at my take profit level, but if price comes back down, I don't want to lose all of my profit, right? So let's say we draw a fib retracement on there, and you go, okay, if price breaks below, or if price breaks below 50%, I want to at least take some profit. Because price, if price comes back down to 50 or 61.8, you know, you still get, generally price can bounce off those levels. But if you say, okay, if price reacts or retraces X amount, I want to take at least some profits. Let's say you're targeting a higher level up. Where's the setting to turn off auto scale? There it is. So let's say you've got another sell order back up here at like 0.03, right? You go, okay, cool. I've bought down here. I want to take profit at 0.03ish. It's going to take a while to get there. If price comes back down to this level here, I want to take profit just in case the market turns around and crashes again or turns to crap. This is where your stop limit orders can come into play, because what a stop limit order does is if you have, say, your coins at your stop, whatever the price is that hits the stop, it'll activate your limit order at whatever price you set and the amount of coins you want to sell. So let's say you go, okay, I want to sell off at least 50% of my coins that I've bought at, let's say if price comes back down to 0.018, for example. So you'd go 0.018. My limit for that order is as low as 0.017. The limit has to be, let's say you're using the stop in a bullish market, in an up market. Okay, say my limit is this much. If price comes back down to this price point, it'll activate the limit order at this price or whatever price it can get closest to this level and sell your coins. That's how you use the stop limit function in, say, Poloniex. The other platforms like Binance and everything, they have the same stuff, so it's exactly the same. So this is all shown in the beginner course in video 6. Okay, again, Startcrypto.online beginner's course. Completely free. Question, what are the best times to trade based on your experience? In crypto market, because the market's open 24/7, there's no real best time in the day to trade specifically. That will change though, based on who's awake and who's asleep at night. Now your US time zones, technically at the moment US time zones are best to trade in because most trading is done from US markets currently, but it doesn't make a huge difference at the moment. What you'll see is as we approach our overall market cap in the future, the time zones will come into play and be much more important. Like in Forex, for example, because the market's not open 24/7, it's open 24/7 during the week. It closes on the weekend, obviously. When it's open during the week, what you get is you get the largest markets are the US market and the European market. So what happens is during London opening and New York opening, those are the two most volatile sessions during the day. In crypto, those two most volatile sessions are not really as prevalent as in other markets like Forex markets and stock trading markets and stuff. So keep that in mind though, because it will make more of a difference in the future. So it's always handy to know. It's always handy to know that sort of stuff. Obviously, a couple of the largest groups that I post in Australia groups, most people aren't online yet. So I'm not getting many viewers, but what we'll do is we'll keep going over this Ethereum chart. Okay, so we've got our support and resistance levels in there. We've got our 50-200 EMA on there. If you're able to add more indicators, definitely if I was only going to use 3, I'd probably use the 50-200 EMA and the RSI. If you can add 5, you can put the volume on in there as well. You can also add, so as far as an EMA is concerned, you can do a 10 and a 20, which are used on some platforms. So this is, so Poloniex uses 50. So Poloniex uses 20 and 30 on their default charts. Let's have a look what Binance uses. If there's any other articles or if there's any other questions, guys, post up questions. Happy to go over whatever you want to look at or talk about. If there's any other related questions on anything to do with crypto, mining, masternodes, anything at all, just post any questions, guys. I'm across everything crypto, so we can discuss absolutely anything. If I don't know, I'll tell you that I don't know. This chart is taking a very long time to load. Let's try reload this. Let's try pick a different coin. Moving average. Okay, so Binance uses moving average 7, 25, and 99. So, you know, Binance being the largest tradable platform, you want to align yourselves with things other people are seeing. Market cap, adjusted volume, OKX and Hobie. I haven't really seen what OKX use. Charts. Let's just pick one. Classic trading. see. Let's go charts. Charts. No idea what K-line is. Okay. They use moving average 7 and moving average 30. Now I don't really use the 7 moving average. Binance uses 7, 25, so 25 and 30 on this one. So you could add, if you wanted to add a couple more charts, and I'll do some testing on these as well myself, because I don't currently use them. But if you wanted to add the moving average 7, default time frame is 9 for the moving average, so that's not too bad. Could keep it on 9 if you want, or change it to 7. Justify Crypto, Binance and OKX being the two largest trading platforms, but I don't currently use them, so you know, you can use them, but I wouldn't. Again, it's an indicator, it's a laggy indicator. Every indicator is laggy. You can use it to line up with your other. You can use it to line up with your other stuff you're seeing in the market. So we'll go over. Fibonacci is also a very big one that I use myself, for not only Fibonacci is a big one I use myself for not only to see a retracement or bounce back or whatever, but also to take profit. So in TradingView, if you click on this little tab here, go to Fib Retracement. Now to draw a Fib Retracement is basically, if you want to get a retracement, you obviously go from either high point to low point or low point to high point. So you want to go from the low point to the high point. Now just pretend as if this data over here does not exist. Okay. So if we do a Fib retracement, if we go, okay, we just hit our low, we draw it to our high. If we draw a Fib retracement there, now if we go into a lower time frame, where'd it go? Here. So if we pretend that other data on the right there doesn't exist, so Fib retracement is basically price going from low to high. Once you've hit your Fib retracement, once you've hit your Fibonacci level, there's a potential there for a continuation. So Fib retracements are basically to be used in line with everything else you're using, your EMAs, your support and resistance levels. They're to give you a healthy retracement for a possible continuation, or they're also to give you a potential take profit level in line with other support and resistance levels as well. So in a heavily bullish market, or not in a heavily bullish market, but in a bullish up move, for example, on that price, if you look at how I use these Fib extensions, if you drew a Fib retracement and go into the settings, okay, so these are the levels that I use. I don't use 2, 3, 6. You can keep it on there anyway. I mainly use the 382, the 5, and the 618, and the 786. 786 is like a deep retracement, potential good buying zone when we're in a bullish market. The minus ones that I've added in here, minus 0.27 and minus 618. Okay, these are for price continuation take profit levels. Now, I did this on Bitcoin, the whole Bitcoin move from say September, October, all the way up to the Bitcoin highs. And this helped me take profit when we were in new areas of high, so new all-time highs. This helped me to take profit at certain levels where I would have missed profit again. Okay, and it also gave me a zone to bounce back from and then continue on with the bullish sentiment as well. So the minus 0.27 and the minus 0.618 is used in terms of when we're in an up moving market. If we bounce off the 38.2, so if we bounce off the 23.6 or the 38.2, somewhere in there, price, now this specific part is generally used in a bullish market. So this is covered in the advanced lessons mainly, but if price bounces off these 2 points here, there's a high chance that it'll go to this minus 61.8. If price bounces off the 50 or the 61.8, there's a high chance it'll go to the minus 27. So if we continue on, if this was to be the start of a bullish market, you know, we're not in a bullish market at the moment, but I'll just show you guys an example. Price continues on, continues on, continues on. So price came back down. So this would get adjusted up to here. Price comes back down, touches exactly on the 51.8. On the 50. So my take profit level, because we have a resistance level here, and this is my price extension, this around this level would be my take profit level. Okay, boom, boom, boom. Price plays out, still going, and price hits that take profit level directly in line with our support and resistance level as well. So my sell zone would basically be within this level here, and that's where price got to there. So that's an example of how to use the fib extensions. Now in a bullish market, the fib extensions are ridiculously on point. They happen a lot. Let me show you an example of what I did during Bitcoin up move. Okay, so things like this is September. So this is our 3K highs. So if we do like a fib retracement from here to a new high, okay. Boom. Came back down a little bit, touched, came back up. So new high here. We came back down 61.8. So first take profit zone for me was around here. Okay, one started completed, that's now complete. This fib retracement. So then we do the next fib retracement. You go from here, which is our low, up to our high. Okay, came back down, tested the 50%. My next take profit level was up here. 9K, bang, hit that. That one's played out. Oh. Come back up to here. And this is where it gets really cool. We're starting to accelerate. Okay, so this is our low point. And this is what I talk about, market acceleration and deceleration. So we're starting to accelerate. Now at the same time, I was drawing things like this. So this trend line was active here. This trend line was active here. From here to here. From here up through these points one touch there, one touch there, one touch there, one touch there. Okay, so that was a trend line as well. So as this market was folding out, had trend lines here, had trend lines forming here, and then price is still accelerating. So to me, price is going to go higher. Okay, so this is where the trend lines come into play. So we're starting to get an accelerating uptrend. Okay, now this is where the fib extensions come really cool into play. Is we have our low point here, right? We now have our next high. If we zoom in a little bit, so you can't see that price action. We now have our new high here when we hit, 11.5K from just over 5K to 11.5K. We pretty much accelerated every day right up to there. That's when we got our retrace. That's when we got our biggest retrace back down to 9K. So that's where we drew our Fibonacci tool to. Our price only hit the 38.2. So to me, my next take profit level was up here at the minus 61.8, which was 15K. So bang, took profits there again. Okay. Fibonacci again, this is our low. This is now our high. You can see how good this works in a bullish market. This is our low, this is now our high. Came back down to test the 50. So guess where we're going? We're going to the 27.8. The 27, which was bang, spack, bang on at the top. So I did take profits right up here. Cashed out some Bitcoin right up there. Obviously I didn't cash out a whole shitload, but I cashed out at each of these levels. I cashed out a certain number of Bitcoin for my living expenses and all that sort of stuff for a number of months. Okay, so cashed out, cashed out, cashed out, cashed out, and that's before we saw any new highs or anything like that. Okay, so that's what I mean. Like, you still need to take profits because these are new all-time highs. We don't really know where price is going to, so I'm not going to offload all of my Bitcoin here or all of it here or all of it here, because you don't know if price is going to continue on or not. And then you can kind of do the opposite. Once we start to see a bearish market cycle, like, when we start to get to, say, this kind of points around here, this is when we're definitely starting to say, okay, yep, we're definitely bearish, because we failed to break, we've broken lower, lower, lower. We've failed to break higher twice. We've broken back down. We've come right back down to this level. We failed to break again. Okay, so things like the Fibonacci thing can be used the complete opposite as well. So let's say from this price point here, low, bounced off our 61.8. Obviously it's taken price a lot longer to get there. We've hit there, which is the move for that price point. So from a bearish point of view, you can still use this as well. Obviously on a shorter time frame, that's on a daily level, but that was what I was using my fib extensions for during moves of new unseen territory. And I'll do the same thing when we if we hit a new all-time high on Bitcoin, if we smash above 20K and then we get a pullback to only a certain one of those levels, again, that'll be my next take profit level if we get up there again. Question: if you have $100 in Kitty, do you go all in for trading or use 10% in 10 different trades or any other strategy? So basically, if you've only, it depends on what $100 means to you. I mean, to me, $100 is not much at all. if I only had $100, and again, it depends purely on what it means to you. Now, generally for trading any market, you want to use a small percentage of your portion of your capital per trade, as in risking the amount. Like if you lost a couple of percent, that's your trade. Now, that can be done a number of different ways. So if you're trading, say, altcoins, for example, and you open a trade here at 0.02, and if you use 10% of your capital on buying that coin, if you wanted to lose, say, only 1 or 2% of your capital that you've used, you can set your stop limit and so forth below it, so the coins will exit out. So let's say you use 10% of your capital on that trade, you want to lose only 1% of the capital. If you open at 0.02, your stop loss would be at 0.018, which would mean if price moved back down to that point, your 10% position would close and you would lose 1% of your overall portfolio. So I only advise risking anywhere between 1-2% per trade, maybe 3 max. The reason being, if you lose 10 trades in a row on different percentages, okay, let's say you risk 5% per trade and you lose 10 trades in a row, okay, that's 100, so that's 50%, is 50%. For you to get back to your original portfolio, you need to double that. So you need to earn 200% to get back to your original entry point, and you've only lost 50%. Okay, if you do the same thing, if you only risk 1% per trade and you've lost 10 trades, this leaves you with 90%. To get back to your original position, you only need to make 11% to get back there, which would be 99. If you made 10%, would be 99, and then 11% would be 99.9. So you can afford to lose a lot more when you risk smaller amounts than vice versa. The same thing applies if you lost 10 trades at 2%. Okay, leaves you with 80%. You need to make back another 25% to get back there. So you can see quickly how losing smaller amounts can quickly keep your portfolio afloat in times of need. Now, there are going to be times when you can lose multiple trades in a row. You can lose 2, 3, 4, 5, 6, 7 trades in a row. So that needs to be taken into your risk management strategy as well. Like if you're risking 10% per trade and you lose 7 trades in a row, that you've got 30% of your capital left over. You now have to make back, over 300% of your. You now have to trade to make back 300% just to get back to your break-even point. So risk management is very important. I will do some new videos and some new content on risk management specific stuff, which will be on the website as well. I haven't delved into risk management in the beginner videos based on the fact that there's a lot to take in as well. So beginner videos are basically just how to get a feel for the market, how to get involved. Risk management is definitely important though, but if you had $100, it purely depends on what your risk is. So if $100 is a lot, if $100 is a lot of money to you, I would justify using the 1 or 2% on $100. You can easily do that with certain coins. You can easily do that with certain trading. If $100 means pretty much nothing to you, I'd probably just say, look, chuck the $100 into a coin. But it depends on how much money and how much money extra you're going to be putting into the market. Like if you're putting $100 a week into the market, well then over a 52 week, that $100 is only going to be 2% of your entire capital. So there's nothing wrong with spending that whole $100 on one coin or one trade, for example. If $100 is all you've got, you don't really want to lose that $100. So you want to be able to spread it across multiple avenues of trades and trade correctly. It comes down at the end of the day to what you're going to be doing. Comes down to how much money you're going to be putting into the market, and how much you've got to risk overall. So that it's a really open-ended question, really. But yeah, if you go to $100 and that's it, I would advise using a couple of bucks per trade effectively. On most coins that's going to be very hard to do because $100 is, say, dollars to Bitcoin. It's like 0.018 Bitcoin. I recommend most people to start with at least anywhere between $500 to $1,000. Because if you're trading, if you're trading $100, 0.018 Bitcoin, it's very hard to just keep buying extremely small amounts of coins and trading them correctly with a very small capital portfolio. Because if you're trading with $100 and you're risking like 2%, that's like $2. So to continue trading for that $2 amount is it's a lot of time to be trading. It's good to learn, but what most people will find is if they're using a small amount of capital, if they're only using a small amount of capital and it's not worth much to them, they'll take risks they shouldn't normally take. And it's only when the losses start to matter to you financially that you really start to learn patience. Because when I very first started Forex trading, I blew multiple accounts in Forex trading at the beginning of my journey because I had a good paying IT job and I was earning good money, and I started trading with about 2K, and to me 2K was not a lot of money at the time. It wasn't much at all. So for me to be risking 1% on that account, which was $20 to me was not much money at all, and I would just go, well, I'm spending hours and hours on all this learning and trading. I'm spending so much time on the charts, updating my charts, updating my watch lists, updating everything, and then I might have been entering 1 or 2 trades a week, and I was risking $20 to make $20 to $40, and I'm like, this is silly. Like, I wasn't thinking in terms of percentages, I was thinking in terms of just dollars. So to me, what I needed to do was I needed to increase my trading balance to an amount which was big enough for me to care about a loss. Like if I lost the $20, I was like, oh, who cares? It's only $20. Like, doesn't matter. So I was entering trades that I shouldn't have been taking in the first place because I was thinking it was only $20. You know what I mean? So I was entering trades and just going, oh yeah, that looks like an okay trade. I'll take it because it's only $20. When realistically, you should be trading in terms of percentages. To get to the percentage value though that you need to be risking money that you're not happy to lose. And when I say not happy to lose, I mean to actually make you think, okay, like if I lost $500 or if I lost $1,000, for example, would that impact me? And if you say yes, that's a good thing because it means that you're actually going to think and analyze the trade correctly rather than just go, it's only $500, it's only $1,000, who cares? Like, just open the trade, see what happens kind of thing. That's just straight up gambling, you know what I mean? That's just punting. You might as well go to the casino and chuck it on red or black and just, if you're not worried about losing the money, that's, you can just double your money right then and there. But if you want to actually become a professional trader, you need to take into account the patience and getting over that fact of just going, oh, it's only $20 or something. You know what I mean? So that to me was where I struggled with my initial journey, was like I was only using small amounts of capital to what I was earning, so therefore I wasn't taking it seriously. Question, should people do margin trading when they start? There's nothing wrong with margin trading, but if people are using leverage without learning first, they shouldn't be doing that. Let's just go on BitMEX, for example. BitMEX has obviously, leverage trading. You can do Poloniex has leverage trading as well, only at 2.5 times. The main use for leverage trading should be not needing to keep all of your capital on the exchange. Like, let's just use round figures. Let's say you've got 1 Bitcoin, okay, and you don't want to leave the whole 1 Bitcoin on the exchange. If you put 0.1 of a Bitcoin on the exchange and trade at 10 by leverage, it's like you're trading the 1 Bitcoin, okay, with 0 leverage. That's how leverage should mainly be used. Leverage is more of a tool to not need to store all of your capital on the platform. Because if BitMEX closed down, got shut down, whatever happened, or your account got hacked or scammed or something, you're not going to lose all of your capital. You're going to lose a portion of your capital which you can leverage trade with, okay? That's the main use that leverage trading should be used for. There's nothing wrong with leverage trading at all, but it needs to be taken seriously because you can obviously lose a lot more money when you start leverage trading than just buying an altcoin, for example, on a normal traditional exchange like Binance, for example. Okay. You can lose a lot more money margin trading, leverage trading. So definitely people need to learn how to trade correctly even before looking at leverage trading. But that'll definitely be covered in my live trading. We'll definitely do leverage trading. Like if there's a good opportunity on Bitcoin itself, for example, I will definitely leverage trade. There's no doubt about it. So I'll definitely trade on, say, BitMEX. You can go long or short on BitMEX leverage trading. Same thing with any of these other currencies up here. You can go long or short on these currencies. Okay, on someone like BitMEX. But overall, yeah, margin trading should be taken very seriously, and people definitely need to learn. Definitely need to learn accurately first. Question, in Poloniex lending factum lending rate is 0.1%. Can people make assured money there? Yeah, you can definitely make money with lending. Lending rates do differ as well. So when I was trading heavily on Poloniex, when Poloniex was #1 volume, I used to use a portion of my capital purely just for lending. Because what you could do was you could basically set your rates as whatever rate you wanted to, and if that rate got hit, you could be making good money. Like there were opportunities there where I was lending, and again, it's a it's a bit of a catch-22. The lending rates are much higher when the coin is moving either up a lot or down a lot, obviously, because people are margin trading that coin. So if you're trading, you can be potentially making a lot more money trading the coin rather than lending the coin. But to give you an example, margin trading, there was a time when I had a crap load of Dogecoin that I bought at like 20 Satoshis, and I was lending out a lot of the coin at 5% per day. So I was making 5% per day on my Dogecoin during certain moves. So for me, I was happy with 5% a day. 5% a day was sweet for me because it was the max lending rate, and people were just going spastic over, trading this coin. That was when Poloniex was #1 trading volume. Now for me, the lending on Poloniex specifically probably doesn't make much sense. But back in the day when it was #1 traded platform and heaps of people were trading on it, you could make really good money just from lending, and you can't lose your coin from lending. So if you're lending any of these coins, you cannot lose your capital lending. Cannot lose it. So you can only make money from it. So it was definitely a profitable situation to be had back then. Yeah, you can make assured money with lending, definitely. There's a couple of other lending platforms which doesn't have a lot of volatility, but there is a project called Ethlend, Ethlend.io. Ethlend.io is a lending platform for people to borrow crypto. You can lend money here as well and make money through this. What I found was when I looked into this last time, there wasn't a lot of good rates available because not many people knew about it. That may have changed. I haven't had a look at it in a while, mainly because we're in a bearish market and like not many people are doing much at the moment. So the rates were pretty crappy. But again, for you to borrow money from this platform, like from someone else, it's peer-to-peer lending. For you to borrow money from someone else, you need to stake more than the capital that you're borrowing in the smart contract. So it uses smart contracts, and you need to basically send the money as like these guys are like a escrow service kind of thing. So you can't really lose money here either. If you just go straight crypto to crypto, if you go crypto to US dollars, obviously you can lose money depending on what's happening in the market. But if you go crypto to crypto, you can't lose money. From what I've seen, I haven't used it in a long time, so don't hold me to that. Obviously, make sure you read how it works. But when I looked at lending here previously, you had to have 150% of the capital that you were willing to borrow. So let's say you wanted to borrow 1 Ethereum, you had to prove or stake that you had to prove or stake that you had, say, 1.5 Ethereum. So yeah, that site can be good as well. Obviously, it's an uptake thing, education thing. So I do have I think I did a video. I'm sure I did a video on Ethlend. Let me just check my YouTube real quick. I might not have uploaded it or finished it. No, I'll have to do one. Yeah. When your money's lending in Poloniex, you don't get fork coins. No, I don't think so. But there's no fork coins anyway on Poloniex there. Like like none of these coins have forked anyway. Like Bitcoin Cash forked, but you're not going to get. There's no Bitcoin Cash trading lending pair anyway. So yeah. What I'm going to do, guys, is I'm just going to have a quick break. Just going to grab a drink. It's 4 p.m. here Monday afternoon, so I think it's beer o'clock. So I'm just going to change this screen over really quickly to a intermission, and I'll be back in about, give me like a couple of minutes, like 2 or 3 minutes or something, guys. Not going to be very long. So and then we'll get back into, we'll start. We've gone over Bitcoin. If any new viewers come in, we can kind of go over Bitcoin again. But if there's any other coins that you guys want to chart up, or if you want me to have a look at, for example, you know, post up in the chat. Post up in the chat any questions while I'm gone. I'll get back to them when I get back. And post up any other things you want to have a look at, whether they be new coins or new articles, news articles, you know, group links or whatever. Just give me a post up in there, and we'll have a look-see at whatever we want to do. So I'm happy to stay live, guys, bloody all day, all night. If we, you know, if there's people here, if I can help any one of you out, happy to help out. It's Help Out Monday. So I'll be back in a minute. All right. I'll just go back to this screen. Be back in a minute. Okay, back guys. Set up my screen again. Let me repost this stuff. Give me a sec, I'll just go back to this other page. Hang on. Okay. Just chuck it in there. Easier for people to get to. Alright. Back to YouTube's. Okay, question. Do you have a calculator when you enter the price of Bitcoin purchase and want 2% profit? I pretty much just do most of it in my head, man. So like, you know, $4,000 Bitcoin plus 2%, 1% is $40, 2% is $80. So I set my take profit levels based mainly around that sort of stuff. If you want to, you know, very rough calculations. You can always set. I don't really set. I don't really set take profits based on percentage increase in price per se. It's all around support and resistance levels and every other sort of indicator stuff that I use. So it's always a different percentage. I will generally stagger my sell orders though, based on, you know, like let's say my first sell order on an altcoin is, you know, 30% away. I'll base it on that, and then next sell order a little bit higher up again from that, and then possibly a third order above that again. Depends on what's happening in the market, and depends on how the altcoins performing as well. So again, if there's any new viewers in here, guys, completely free cryptocurrency trading course on Startcrypto.online. Okay, completely free. You just chuck in an email, your name and your email address, come under trading content beginners course. That covers all the beginner stuff. That's free. Go into mining and masternodes as well. Okay. Is anyone doing in mining or masternode stuff at the moment? Bitcoin. While no one's got any questions, we'll chart up Ripple. If anyone's got any questions, guys, just chuck them in chat. Otherwise, between questions, we'll just do some charting. Just chart up some charty up. Oops, not there. Nice levels. Just on Ripple at the moment. So Ripple's actually surprisingly been very vigilant during this last few weeks. It's actually been moving up quite steadily. So we've just touched again 10,500 sats. So this chart is XRP BTC. Just touched again here. I'm just gonna go through the top maybe 10, 20 coins and chart them up, add them to this watch list. So had a good big pullback back to 6K, spiked to 11.7. That was a massive move. So I'm not actually looking to get back into Ripple here. on BitMEX can short this. So if there's a short, this may be, Ripple can short it. So this may be a decent, short coming up here as well. Let's have a look at it from the weekly time frame. So from a weekly point of view, we've got a high test, what they call a high test candle, which means price just frantically whipped up. High test candle on the weekly. Start a new week here. It's this is obviously just started a new week. So what we're looking for here is the start of a reversal pattern. If we can get anything, we start forming lower lows, lower highs, even on something like the 4-hour chart, will be fine. So if we were to make, say, lower low down here, and another lower high, potentially trade this back down to potentially back down to the 7,200 level. So I'll be keeping an eye on Ripple over the next day, because it's probably one of the highest. Like most of the other coins have kind of followed Bitcoin they've all kind of dropped quite a bit. Whereas Ripple has it's overtaken, it's number 2 at the moment. It's actually still been going up in Satoshi value while Bitcoin has been dropping. So if we still remain in a bearish market on Bitcoin, there might be a pretty good opportunity there to short Ripple. Let's just have a look on Binance. So price is still pretty relevant. Price is pretty close. Quite a lot of buy orders in. Overall buy and sell amounts are pretty similar right the way down the graph. Much else to really look at the moment. Ripple, we're doing 1 day. Oh, wrong button. We've actually had a golden cross there. Scroll down to the lower time frames. So we have started to reverse in price a little bit on the lower time frames. Again, we want to take the higher time frames into consideration. There's nothing wrong also, guys, with your support and resistance lines, what I used to do at the beginning of my trading was if I had, say, a support and resistance line which was good on, say, if it was there on, say, the weekly, the daily, the 4 hourly, and so on and so forth, if it was a good support and resistance line across multiple time frames, I'd change it to a different color, like maybe a gold color or a green color or something, just to indicate that that support and resistance level is actually more of a great level because it's been hit multiple times on multiple time frames. Because what you start to get is you'll get a breakdown of longer term support and resistance levels, okay, kind of like this on like a daily level, and then you'll get a lot of little levels in between those levels as well. So if we're looking for an opportunity kind of within this time frame, within this chart, here's our daily kind of trading range at the moment. If we scroll down to like a 4 hourly, you'll see within that day-to-day trading range, where it takes a number of days to get to that trading range, you'll see that you'll get a number of different levels on, say, the 4 hourly chart. Like, for example, within these daily ranges, you'll get things like this, where you've got kind of like, you've got like a level here, where you get a touch here, a touch here, touch back over here. Okay, you can use those as like an intra level trading zone if you're trading on a lower term time frame. So you can start to map, say, a 4 hourly level there, and another 4 hourly level, kind of prices bouncing off this point quite a bit. Let's say across here as well. And then if you scroll down to the hourly again, you get another support and resistance level within the 4 hourly time frames. So you can see here, multiple touches here, here, and here, here. So you can have an hourly there. You could have an hourly here. Touch here, 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 all before bouncing back up. Get a break and a retest of that line here. So this is on the hourly. So if you were looking for 4 hour and 1 hour setups, you'd be trading between here and here. If you're looking for 1 hour setups, you'd be trading between here and here, for example. Okay, and that basically happens as you go down through the time frames. So the lower the time frame is more of a timing thing between zones for you to be trading, right? So you're not just going to look at like a 5 minute time frame and go, oh cool, there's a head and shoulders pattern here on a 5 minute time frame. I'm going to go all in short, because on a 5 minute time frame, it really doesn't matter. What really matters is trading between your larger time zone zones and then entering and exiting based on your different levels of different zones. All right. We got any questions, guys? We've only got a few viewers watching, so go over some questions if we've got any questions. If not, guys, I may call it there and jump back on again tomorrow. Save some of these charts for tomorrow. And we could also have a look at Ripple tomorrow as well. So if anyone's got any questions, fire away. We might jump back on tomorrow closer to a little bit later time. Give everyone a different opportunity to jump on. Might kick off around this sort of time tomorrow to give people in different time zones an opportunity to tune in as well. So just a quick shout out again, guys. Startcrypto.online, bringing you guys completely free training course. Sign up for free under Trading Content Beginners course. Go through those videos so you are familiar with all the terms and everything that I'm talking about. And next live session, you'll kind of understand it and kind of be able to know what I'm talking about much better. Anyway, guys, we might call it there then. No other questions from the stream. We'll save some of these other charts for next session. So what I want to do is we'll add, say, top 10, top 20 market cap coins into a watch list. I'll show you guys how I've charted them, and then we can continue on with what we're going to be looking at moving forward. Anyway, guys, take it easy. Thank you for tuning in, and I'll catch some of you tomorrow if you guys jump on tomorrow. Peace out, guys.